Honasa came out with its earnings yesterday. Let's take a look at how the earnings fared, as well as the bull versus bear case for this particular counter. Lots happening in the company. Let's find out. With respect to the numbers, revenue was pretty much in line, but EBITDA and net profit was a beat for the company. Last quarter the company saw a loss, but this time it's turned profitable. However, the profits were flat at around 26 odd crore. In terms of the bear case with respect to this, Mamaearth as a brand has not been doing well for the company. It's the acquisitions and the partnerships that Mamaearth has entered into are working well for the company. The revenue did see a low double-digit decline, in fact, in the Mamaearth brand. Moving on to the next case, the focus categories did see an 18% uptick growth in terms of 9 months FY25, but Mamaearth originally started off as a baby care business and is now selling skincare business. So I mean, the management right now has to decide as to what it wants to do exactly. It's not clear whether it's want to be a baby care brand or a skincare brand overall. Moving on to the next case, the bull case suggests that the direct reach went to around 90,000 outlets from 45,000 outlets in the second half of calendar year 24. This is because they're shifting towards a general trade model, but management expects that a clear direction with respect to this will emerge in the next 6 months. So for the next 2 quarters, we'll have to wait and watch as to how this transition from a digital first brand to moving towards owned stores or a general trade distribution model, how that pans out for Mamaearth overall. In terms of the next counter with respect to the bull versus bear case, company has now turned to profit from losses. But moving to a general trade, margins will certainly be under pressure till the entire transition takes place. And of course, going into general trade will require a lot of other expenses also. So operating leverage will not play out in their favors, and hence margins will remain under pressure going forward as well. With respect to the stocks, the stock is kind of has seen gain in trade today. But overall, if we see, despite today's gain, the stock is still 30% down from its listing price of around 324 odd rupees. Next, with respect to brokerages, Kotak has upgraded it to add from reduce, but the target price has been reduced to 250, which the target price has already been achieved today. The stock is currently trading at about 255 odd rupees. But Citi, on the other hand, has maintained sell with a target price of 180. Both of them have given their arguments respectively. Kotak has upgraded it and it's saying that following the 45% correction overall in the stock, the stock looks attractive to buy right now, but Kotak target has already been achieved. So we'll have to wait and watch as to what is the next target for Kotak going ahead. But Citi has said that it's cautious due to uncertainty on growth as well as margins going ahead. So this is the overall view as to how Q3 has panned out for Honasa and how the bull versus bear case looks for Honasa. Mr. Chokalingam, I'll come to you. Your view with respect to how one should do with Honasa if the person has this particular counter in their portfolio.
I would give a sell call. I looked at the results. Top line has grown significantly, but year-on-year profit growth almost stagnant. So I do not understand why one should pay 80-90 PE for a company whose profit is not growing in a very, very strong double digit, So I would give a sell call on Honasa.
Okay. Mr. Chokalingam, if not Honasa, anything else? Nykaa has done well. Maybe there are some others. Anything within this bucket?
I am not convinced. As you know, I have been skeptical about all these companies who are enjoying 100 P or 1000 P, but which is not reflected in the proportionate growth in the profit. So I would still prefer traditional businesses, age-old companies already listed rather than these new companies.